Hey guys, we're back. Episode 28 of Leading by the Book with Chris and Tim and my trusty 11-year-old golden retriever, Wesson, who got half of a haircut yesterday and now looks like the saddest dog in the world.
Only half a haircut, huh? Which half?
Well, a little bit. I'm just kind of averaging this out here. It's not like a firm half. It's part of the top of her coat has been cut and part of the side.
Mm.
Oh my gosh, that poor dog.
Interesting. So
Yeah.
why didn't you finish?
We got busy last night, and then it became time to just get everybody showered and off to bed. So hoping we find some time for part two, because no matter how old the puppy is, she does not need to go out in public looking like that.
Yeah, that would be embarrassing.
Oh, it's quite
That would be
embarrassing. So before we got rolling today, or I should say earlier this morning, I sent you a message and said, hey, any topics you want to touch on today? And I had a few that I wanted to touch on. And you sent me a laundry list of probably 30 or 40 points, I'm estimating, of things that you have on your mind. And I don't even know where to begin. But something we were just chatting about here is oil. Did we find excess capacity? What's going on with this?
I don't know. It doesn't make any sense to me. I mean, oil. When you're looking at, okay, for the normal guy, right? And we're just normal guys, but like some people may not understand this. When you're looking at, say, Yahoo Finance, and it's telling you, was it last week or the week before when oil went negative? I think it was the week before.
I think it was last week. Was it?
Well, the contract expired April 20th. The May contract expired April 20th. So what happens is, what they're showing you is the futures contract that's coming up. So that was a May contract, and the futures contract says, okay, I want to buy oil in May, is what it is. And let's say I did this back in January. So I want to buy oil in May, and I'm going to take delivery of it. Let's say I'm a trucking company, or I'm a whatever.
Say you're an airline.
Say you're an airline. Yeah. So I'm going to buy oil. So they go in, they buy oil. Well, it's the May contract that Yahoo Finance or whatever index that you're looking at for oil is buying. And the May contract expired negative. And at one point it was like, I believe it was less, it was negative $40, which means you paying somebody $40 a barrel to take your oil. And the reason is because there's the storage capacity was pretty much exhausted. I think I had read somewhere that up to 70% of the U.S. storage capacity was taken up, and there's all sorts of stories of ships floating offshore and all this. So then, the very next day, so that was the May contract. So then you got the June contract behind that. So when we're looking at quote unquote the oil price, we're looking at first the May contract that expires worthless. Then the June contract comes up, and that's the one that we're looking at right now. It's been extremely volatile. I think the very next day it traded. The June contract the day before, when the May contract expired worthless, was like $20. Mm-hmm. And the June contract is the one that we're looking at now. At one point it dropped down to like $1.25, $1.50. I can't remember how low it went really, really low. And then it shot all the way up to where we are today. That was just
WTI crude right now. This is 230.
1865.
I just saw it. It's up 23% for the day,
which is just crazy. So that's a huge delta. And so either there's some kind of speculation going on in it, or somebody found some storage capacity. But we're going to find out over the next, almost 3 weeks when this one expires. where they're going to put it. Maybe storage capacity went up. I heard demand's increasing. Maybe they're anticipating, as the U.S. starts to open up more, or as the world starts to open up more after this virus, that they'll start using it. But there's still so much floating offshore. I'm just really confused.
This is the point where we need to talk about something that we talked about in our cult meeting yesterday morning. The difference between investing and speculating. The stuff that we see in the market right now makes no sense. But you know what? It never makes sense. It's just more amplified now. But
Well, so I read something last week that was really interesting about the USO, the largest oil ETF in the world, I think. And they roll over they use the futures market actually to produce similar returns to oil. Well, what happened was, again, the May contract expired worthless. The June contract was $20. They had to roll over their contracts, right? And so there was a point at which over the last 10 days where they rolled over their contract, because that's what they do. And there was I believe I had read there was a 36% premium to the book value, which means, because it had fallen so much, which means you're guaranteed to lose 36%. It's just a bad spot. And so then they changed the composition of their contracts, so they're diversifying it over several months, which is smart. That's what they need to do. Otherwise, you get a bunch of hedge fund vampire sucking squid that will front run them.
As you alluded to me earlier this week, but this is also one of the reasons why I am much more inclined to invest in infrastructure rather than the actual product itself. So I'm much more inclined to invest in the oil pipeline than the actual oil. Demand for oil is going to change, but the pipeline is always going to be used. I'm much more inclined to invest in the internet or the internet provider than the actual content itself, because demand might change. Netflix is hot right now, but you know what? Whether or not we have a pandemic, people are paying for their cable modems. So the thing that's driving me nuts, though, and this is contrary to an article I just read this morning in the Wall Street Journal, talking about how some people actually view that this recovery, if we'll call it that, actually makes sense. You have people like you and me that for the last couple of weeks have been saying this is lunacy, it doesn't make any sense. But the journal tries to point out that a lot of the recovery that we're seeing is being driven by companies who, because of this post-COVID world that we're going to be living in, are going to appear to have healthier streams of cash flow. So be that as it may, that still doesn't explain the fact that the cruise lines are up like 40% this week. I'll never ever be able to understand. I didn't like cruises before this. I mean, the running joke before this thing was a picture. Do you remember 2 years ago, there was a cruise ship that was stranded at sea for like 2 weeks. There was 18 inches of sewage in the hallway, and all these people got off the cruise ship. And these friggin' cruise lines turned around and handed these people a voucher for a discount on their next cruise? Are you bloody kidding me?
Yeah. It's crazy. But, that's what people do, right? So people say, oh, you know what? Oil's not going to be negative forever. I'm going to buy it. How am I going to buy it? Well, I'll buy it. The easiest way for me to buy it is to buy it through this oil ETF. Well, that oil ETF kind of gets screwed because of the way it's structured. And now, we could be wrong. Like maybe $18 oil is reasonable for this month, but I don't know.
But here's
it just doesn't make sense. But I think it is important, to your point, that we know I'm speculating or I'm investing.
And they're fundamentally different.
Two different things.
It's fine if you think, I think this is going to get a bump because of this. Or so, for instance, this week, Amazon's been running up like crazy. And then I think on Tuesday, Amazon goes down like 50, 60 points and then kind of stays down. And, the whole time we've been told Amazon's going to do so great because of COVID and everybody's staying at home. Prime that has all this demand now. This is great. Amazon reports earnings on Thursday. The market starts dipping it down for a variety of reasons. I'm sure some people thought, oh, well, earnings could never be as good as this run up here. So that's clearly speculating. Another part of it is probably demand being artificially driven down so that you can play the earnings announcement bump. But whatever it is, that is all speculation. And it's so important to know what game you're playing, because the volatility that we see is driven by so many things, and it's not just emotion. But emotion is one of the hardest things to predict, and that is why I will never trust myself to be able to make calls in a speculative nature. That's why I invest in companies with long-term defensible cash flow. I'm probably leaving money on the table, but I'll never be able to be comfortable enough otherwise.
Well, but that's exactly right. Like, you have to know yourself and your risk tolerance, because if you're going along speculating, thinking, I'm a cowboy, this is going to go up, and then it starts going against you, you have to know, am I going to stick in this because I have some reason to believe my speculation is accurate, or am I going to get shaken out? And that's how things get highly emotional. When you're investing, and frankly, like, it's part of the reason I don't really invest all that much in public markets. Most of my assets are held in private real estate investments and things of that sort. But nonetheless, I watch markets to kind of understand what's going on in the economy. Sometimes the markets can be various leading or lagging indicators depending on what you're looking at.
Well, you got to have a plan for it going in. It's
Right.
Mike Tyson, very famously said, everybody's got a plan until they get punched in the face. We all think the stock that we bought is going to go up and up and up until it doesn't. You damn well better have a plan saying, well, I think this stock is worth this. I'm going to let it decline. I maybe even am going to buy into the decline because I think the future cash flows are worth this. But you can't get caught in the situation where things starts going down, and now you're making foolish decisions that may have tax implications, and I'm throwing stuff at the wall hoping that I make the right decision. It doesn't work that way. And that is why, as much as I believe in individual responsibility, I really believe that E-Trade and the things like it have done an incredibly great job of eroding a lot of value from the average everyday working investor.
Sure. Well, I mean, that brings up one of the things that I had given you in my list of what's on my mind is, the world's changed over the last, 20, 30 years, 40 years, where we've moved from, defined benefit to defined contribution plans. And, essentially, we had this conversation earlier. Like, I realized very early on in my career, okay, wait, I can specialize in my career in, I don't know, something, right? Something, and spend my entire career specializing in that one thing. But over time, I have to figure out how to invest, because if I don't, then I have to give my money to somebody else and hope they can invest it for me. And, that's where the vampire squids end up coming into play. Right. There's a lot of folks in the financial markets that are living on your returns, my returns, when you invest that way. And so I choose to do things a little bit different because of that. So that's why I got into really wanting to learn how to invest in specifically real estate, because I also was of the view, similar to Rich Dad Poor Dad. The rich make money by borrowing it and investing it in appreciating assets. And where we're at right now, that's a very dangerous game. Leverage is a very powerful thing. It can work for you and it can work against you.
Yeah. To your point about how much people get rich off of your investment, we were talking about this the other day with mutual funds, and I was actually raised in a family with a lot of people that were wealth managers or stockbrokers. And I was always told how great mutual funds were. And I remember, when I was like 6 years old, and, I'd get, a couple bucks for my birthday, and they'd make a big thing about me coming to the office and picking out a mutual fund or whatever. That's probably the worst advice I ever could have been given as a kid, because when you look at mutual funds and you look at the fee that's charged and then the trading fee, and then you factor in inflation, do you know how well that mutual fund needs to perform just to beat a regular Vanguard index fund? There's no way. There is almost no way that could ever happen.
Right. Yeah, it's crazy. I mean, if you look at, let's use an extreme example. If you look at, okay, I'm going to invest $100. The first rule of investing is don't lose money. The second rule of investing is try to make as much as you can, right? But I invest that $100 and it goes to $50. I lose 50%. If I lose 50%, what kind of gain do I need to get? Well, I now have $50. In order to get back to even, I need a 100% return. I need a 100% return. So it's far more profitable to not lose money on the front end through all these fees. Now, I don't know anybody that charges 50%, but when we were kids, do you remember load and no load mutual funds?
Oh, I do.
Right. So the load meant how much was the commission that your financial advisor is charging on the front end, and in some cases it was like 10%. 10% of the mutual fund would get paid in commissions, and then the fund itself has to make up that return in its over its time. And so you invest your $100 at the wrong time and it goes to $90 just because of the commissions, and then the market starts to rise. Maybe the market goes up 10% the first year, you're up to $99, and then you pick it's just the wrong timing. You go into recession and the market drops 20%. Go into a bear market, like you and now you're like, oh shoot, I don't want to lose all my money, so I sell. Like, that's the other thing is when your assets are priced immediately all the time, it's easy to see that and say it's going down and get emotional and sell.
Well, so there has been a study done on investment returns and the correlation between how frequently the prices of these assets are checked. And in fact, the more you check the asset price, the more, or I should say, the further reduced your return is. And it's like if you check the ticker twice as much, then your asset ultimately becomes worth half as much. And I sort of believe it. Obviously it's equities are far more liquid than real estate, but the example given at the time was, imagine if you were able to check the price of your home every day. There would probably be a lot more people buying and selling. There'd be a much more significant flurry of activity as a result of that.
Well, that's a scary thought with where we're at in technology, because you've got companies like Redfin, companies like Zillow that actually are telling you what your house is worth. That's and so point. Is that going to exacerbate a downturn in the future?
That could be
point. That could create more volatility.
It really could, but it just gets us back to the same thing over and over again, which is why I so much love value investing, because you don't need to be the smartest person to do it. You don't need to be the luckiest person to do it. You just need to be able to control yourself to do it. Well, a lot of things I can't control, so I'd rather just worry about what I can.
Right. I think things like that create, what am I trying to say? Things like that create like an anchor point in your mind. You know what I'm saying? Like this, I would like to buy Amazon, for example, at 2,000. Let's say I like Amazon 2,000. It's 2,400 right now. No. Yes, I'm looking at Amazon. It's 2,400 right now. It's actually 2,440. I'd like to own Amazon at 2,000 because I think it's worth it. Well, if it goes to 2,000 and I buy it, and then it goes to 1,000, if nothing's changed fundamentally, I should be saying, I think that is worth 2,000.
Yeah.
I want to buy twice as much. I want to buy more if I can.
Yeah.
And so it's important to maintain a certain part of liquidity so that you can continue to buy more. And then also a certain part of just an anchoring of what is that worth. Now you need to know, when is that value changed? Because that's a, there could be something fundamental about the company that's changed after you bought it.
Sure. But that's why you need a plan.
Sell it. Exactly.
It's
exactly.
I wish more people would approach buying stocks the way we approach going to the grocery store. We look at something, we know what we think it's worth. Okay, well, I buy macaroni and cheese for my kids at the store. It's usually like $2.99. When I go to the store and I see, it's 2 for 1 or whatever, I stock up on it. It's the exact same behavior, but we get so caught up in all this information that's available to us. Oh, is it its 52-week high? Well, that's irrelevant. That is irrelevant because the 52-week high probably has nothing to do with the future. Same thing with charts, or it's like, oh, you think it's a good stock? Well, it's down from it. Well, it's all relative, and the past is not necessarily, and very rarely is indicative of the future, which is why you have to have a grasp of the fundamentals of the company, and you have to have an idea of what it is worth to you. That's it.
Yeah. Especially if you're going to operate in a market like that you can't control. Now, I prefer, businesses and real estate where I know I can buy this thing. In fact, this is why I originally began investing in apartments, because I know I can buy this apartment and it's, let's say rent's currently $1,000, but if I did this, this, and this, then the rent should be $1,250. Well, that provides me my margin of safety, right? I know I can buy this building. The rents should be $1,250. They're $1,000 for some reason that I've identified. And I have a business plan for I'm going to turn those rents into $1,250. That's going to pay me higher cash flow. And lately, higher cash flow is worth more, substantially more. Substantially more, because cash flow is so hard to find. And that's going to increase the value of my asset. That gives me a little bit of a hedge in case, let's say I buy that asset, the rents of the building are $1,000. They should be $1,250. But then we run into economic challenges. I still executed on my business plan. I took the rents to what they should have been $1,250, but rents in the market fell back to $1,000. Well, I'm okay, because I bought this asset, right? I bought this asset with a business plan to improve it. And while it didn't necessarily improve the value or the cash flow, if the market moves against me, it insulates me from a drop, from a decline, rather than paying full price for a building that's already rented for $1,250. If I pay full price for a building that's already rented for $1,250 and rents go to $1,000, well, now I'm in trouble. Because I had no margin of safety. I was speculating that rents were gonna rise in the future, and I don't like investing that way. A lot of people do, but I don't like investing that way.
Why isn't this taught in college? We have substantially different views on colleges, I think, but just based on past discussions. But my frustration continues to be that skills like this, as it relates to handling personal finances, but also a lot of these things, a lot of skills that unrelated to this conversation about how to build business or be good in a larger business as an employee, are totally neglected in college. But for this conversation here, none of these things are taught in universities, and I think it's a dramatic failing of our system.
Yeah, you know why? I think it's not. I think because the common path and most of the money that funds the colleges, their endowments and things of that sort, are funded by companies, right? And so it's the purpose of schooling is to prepare you for a job, right? If you need a job, you don't necessarily need to understand how to make money in real estate or in investing or in anything like that. You need to understand maybe how to run a discounted cash flow model for the company that is investing in real estate or whatever. And so they teach you how to run a discounted cash flow model, but that doesn't necessarily mean they teach you how to make money.
I would love it if schools even taught that.
A discounted cash flow model?
Yeah.
Come on. Well, I have a degree in finance. Maybe that's why.
And I guess my undergrad degree wasn't in finance. And I took, oddly enough, the education I got at ASU from a finance perspective was okay if you're looking at corporate finance type functions. But as somebody that has spent a lot of time in the past few years doing hiring of both undergrads and hiring out of business schools, the business schools still do a decent job with that. But I also think the business schools have a little bit of an unfair advantage because they're taking people that have had 4, 5, 6 years of work experience. So people have learned a lot of these skills on the job, and the business school maybe just helps refine it, or really all it does is take you through cases. But undergraduate-wise, the quality of skill that I saw coming into the workforce has deteriorated dramatically. And I've told the story before, but I know of undergraduate business degrees. Guys that are coming out of very prestigious undergraduate institutions, coming out of the business program, and they don't know what Excel is. They never touched it in school.
What? This is one of those times I'm going to say picks or it didn't happen.
but it does happen, and our schools are not doing a good job preparing technical skills, and I don't know why that is, because we're certainly not doing the soft skills very well either. And I'm really concerned about the future of higher education in this country. College to me is only going to be valuable if you can replace or increase training that you get on the job. If it doesn't do that, then I'm not sure how it holds value. Does that make sense, that argument I'm making?
Yeah, for sure. I mean, so it was, for me, I think some of the tragedy, though, in it is that, there's a lot of folks that think, I go to school, I leave school, I get an amazing job, and that's supposed to carry me forward. But I think what could come out of college or schooling in general best is your ability to teach yourself, especially with as quick as everything is changing around us. You know what I mean? Like AI, robotics, cryptocurrencies, like, the internet. We could not have gone through this pandemic even 10 years ago the way we have, where everything that we do, we can have meetings on Zoom online. Like, I'm not even sure that was a thing. Maybe, obviously, we could send emails back and forth, so we could do a little bit of work from home. But at this point, like, I'm not sure I'm hampered at all working from home through this. In fact, I feel a bit more effective working from home than even going into the office. Yeah. Just because I'm by myself, and I probably work better when I'm able to think and not get distracted.
Well, and you're free from me all day too, which has to help.
Yeah, I wasn't going to go there.
Yeah, but I have this conversation with my wife a lot. We're constantly debating on, our kids are very young. Your kids are certainly older. This is a much more relevant thought thing for them. But, when I was a kid, it was, get good grades, study hard, try to get into a good school, and you're going to be set. And one, the economy's changed. Obviously, we have 15-year-old billionaires running around, maybe, but close to it. But the question is, are there better ways than college for kids to be educated? I think it's probably a very individual thing. Some kids, yes. Some kids maybe need a little bit of that structure at college, but I'm not sure it's the same as it used to be. It's certainly evolving.
Yeah. Yeah. In any case, I mean, I'm a believer. I'm an advocate of college still. It's getting ridiculously expensive, but I'm an advocate of college still. Um, I guess I think where I would agree though is it's really how much can you educate yourself afterwards, because there's so much information that they just can't capture. Um, one of our many listeners reached out to me this week. I was very honored by them reaching out
One
to
of the
me.
millions
One of the millions
and millions
reached out to me on Twitter after listening and asked with a little bit of shock. You own how many companies? And one thing that I think they certainly don't teach in college that I didn't learn in school was just how that world works of putting a deal together and raising money through investors. And it doesn't take money to make money, but you have to be the type of person that people would invest in. Mm-hmm. And so how do you become the type of person that people would invest in? Well, you don't just go to college to get a job. You go to college to learn, and then you educate yourself on where's the world going. What's a more effective way to do, this thing or that thing? Becoming a person that somebody would invest in, I think is probably vastly more important than going to college. That doesn't mean that college doesn't have value. I truly think it does. I just think that most of the successful people I know have educated themselves in a specific way to where somebody would invest in them. I'm thinking about, our meeting yesterday morning that you were referencing earlier, and just the people that were on that call, and they each invest very different ways. You and I were on the call, and you and I invest in private companies and real estate. We invest in you invest in the markets. I speculate a little bit in the markets. I invest a little bit in the markets. One of the other guys, he actually invests in his time and money into building digital assets. Meaning websites and things of that sort. He's an expert at SEO, and he's also a personal finance believer, an advocate. And another guy who's a real estate developer. He doesn't trust the markets, with a 10-foot pole. And then there's another guy in that group that works for a large real estate holding company, and allocates huge amounts of capital to deals. But each of those people have educated themselves in specific ways that have gone beyond just going to college, that have gone beyond just their formal education, and have invested in themselves in developing their own opinions about the world and how it's changing. One of the things that I really admire about, our friend, who you'll know who I'm talking about, Chris, is the real estate developer, is he's a very creative-minded person that sees the world and culture changing in a certain way, and then positions his real estate developments in a way to take advantage of those things. He's invested time not just in his education, not just in his financial education, not just in the real estate market, but in culture itself. And I think a lot of folks out there, including the very kind listener who reached out to me in trying to understand, how many companies I'm involved in, would be really well served to find those ways where you are really investing in your education. Again, not just formally, but informally, in the things that you love.
Yeah, and talking about a real estate developer friend, it's funny. I've known him since I was 16 years old, and he has he has always been like that with a very unique ability, one that I envy, to be very creative, while also being very, I don't know if technical is the right word, but there's the black and white side of the business, but then the creative side as well. I'm not a creative guy, and I've always envied him, but he is he's always been that way, and that's such a great combination to have. But one thing that sticks out, like I said, when I met him, I was a 16-year-old freshman at Arizona State. Why the hell my parents let me go to college at Arizona State when I was 16 is beyond me. That someone should probably call CPS. But here you go have fun. You can barely drive a car. Go for it. I just remember to him it was he was older than me at the time, but he was always a guy. He's like, yeah, I go to class, I do this, I do the work, but it was never about the class. He was always pursuing knowledge outside
Right.
thing. Whether it was with clothing lines or with real estate ideas, whatever it is, always an idea guy. But his education was not about the classroom. His education was by doing and researching and constantly pursuing. And my biggest dream for people is that whatever you're doing, whether you're working an hourly job that you hate, or whether you're an executive, doing something, whatever end of the spectrum you're on, that you always have that hunger to try to learn something new, and that we never allow ourselves to get caught up in the trap of thinking that our existence has to be limited to the existence we're living right now.
Yeah, I mean that's right. I mean that sort of ties in with my point about all these stimulus packages and how there's really a catch-22 with it. The same thing is we seem to be way more open to these stimulus packages this time around in 2020 than we were in 2008. I remember not everybody, a lot of people were up in arms about
let them fail.
The debasement of the currency, socialization of the risk, while they took the individual profits along the way. That's not even a catch-22 I'm referring to. We seem to be open to it because we don't want asset prices to fall, and that's right. But we don't want our economy to grind to a halt, and that's right. But the real catch-22 for me is that these stimulus packages really, they steal from savers, people who are prudent, that didn't borrow a bunch of money. They steal from those people and give to the people that are really that are taking the risks. And so that's why I think it's really important that we don't just blindly follow along with these things, but we educate ourselves with what does the world look like when the U.S. government creates, $5.8 trillion over the last month in new, quote unquote, they're not even calling it stimulus, but new bailout packages, call them bailout packages. And the true number is undefined because some of those actually, the caps were lifted off of those. There's $5.8 trillion. I'm not arguing what should or shouldn't be done. I'm arguing this is what it has been done. And in light of that, what do we think happens? What do we think happens? We need to educate ourselves around these things. Last time around, I thought all that massive money creation would create huge inflation. Well, it didn't really create broad inflation. It created, maybe some asset price bubbles. There could be some bond bubbles, things of that sort. It didn't create broad-based inflation. And so I don't expect that it will this time either. But those call them rewards of that stimulus favor certain folks. And, right now there's weird stuff going on in the high yield debt markets. And if you're not familiar, the high yield debt markets are basically junk bonds, meaning they're not investment grade. They might lose money, but they earn a high yield, and a lot of the pension funds need these higher yields and have been buyers of these junk bonds for a really long time, at least the last, over the last cycle. And it really creates this situation where it's I think the buying of the high yield bonds is really a backdoor bailout of the pensions.
Oh, definitely.
Right, because they're and then you have guys like who was it, Howard Marks, that just decided he was going to launch a new high yield debt fund himself.
Howard Marks is a smart guy. By the way, Amazon just reported they beat revenue by $2 billion, 75 or 73, but their earnings per share $5 versus a 625 estimate. The stock is down 5.5%.
Woohoo! Woo!
Yeah,
and you still like them, right?
I still
they
do.
got a lot of cash.
I still do.
They've always had earnings that way, though, right? They plow money back in.
Oh, they plow money back in like crazy. I'm sure right now with this infrastructure stuff, they're plowing it back in. But I'm okay with Amazon. My basis on Amazon's 1,300. So.
Oh, nice.
Yeah, that one I'm okay with. But to your earlier point, just about the difference in attitudes, where in 2008 it was let them fail. Big banks are evil. Let the car companies fail, all that. And the difference in appetite for this now, obviously, the government component of being able to tell businesses they can't operate, I think certainly changes people's appetite. But I also think it's spurred by the fact that for a lot of people, whether you were somebody that lost a home, whether you saw your business struggle and slow down, a lot of people, it's still recent enough to remember what 2008 and 2009 were like. And I think that there's certainly more appetite to avoid something like that, even though, as we've argued on this, that the change in our world as a result of this is probably less financial crisis and more like a 9/11 type thing. The people still remember the economic impact of 2008, and it's recent enough that they don't want to go back to it. So I think that's probably why the appetite is a little bit changed.
Yeah, for sure. I mean, especially, and it seems like it's less concentrated, right? So last time it very much looked like, oh, we're bailing out the banks.
Yeah,
and we needed to do that. At least I don't know what else we would have done, but maybe we didn't need to do that. I don't know. I just randomly said that. Nonetheless, that's the way it looked before. This time it looks like we've got stimulus checks going to the people. We've got small business plans going to small businesses. We've got money going to support the high yield debt markets. We got money going to the municipal bonds markets. We've got money going to bail out just about every corner of our country and world. And so you might be right about that's why we're much more open to it. I don't know that I necessarily agree with the statement about this not being as bad as the financial crisis. Maybe I misheard.
Oh no, I'm not saying it wasn't as bad. I'm just saying it's different in the sense that the financial crisis the world kept going on, and behaviors didn't change as much with the financial crisis as they did with 9/11. 9/11, if you look at TSA and just different things with terrorism in the world, that changed the way our everyday lives went. Financial crisis, we had less money, but we still sort of went about things the same way.
Right. Yeah, a little bit. I think things started to change a little in terms of just where, American dream of, the nice house and picket fence. I still don't, we never really recovered, back to the level of home ownership that we achieved before. But who knows? We may not actually get there. I just think I'm actually. I thought I'm actually very concerned about where we are with this one. Mostly with today's jobless claims report. We're up to 30 million jobless claims.
Yeah, there's no way that doesn't hit all corners of the economy. Even Amazon, a company I like. I like it because I like the financials and the cash flow. But that aside, it's Amazon surely got to be hit because there is just going to be less disposable income.
Right. Yeah. Yeah. And that's what I'm most concerned about is we open up from here, and then what does disposable income look like? How many people are employed? What does that look like? How do we get all these people reemployed? Last week it was 11 years of job growth that we had lost. And, I don't know what it is this week with 3.5 million more. But yeah, so anyway, I mean, I think the point that you brought up about education is really important. I think it's really important that we educate ourselves.
Yeah, and no matter how much money you're paying to an institution, you can't treat it as their job to educate you. You got to educate yourself.
That's
and frankly,
right.
There's been no better time in history to be able to educate yourself. It can, we talked about this. We get overwhelmed because there are so many books to read. There's so many blogs to read. There's so many YouTube videos on things to read. It can be very, very overwhelming if you don't have some semblance of discipline about it. But there's still no excuse for not knowing these things and not taking the initiative.
Yeah. Yeah, that's right. And I think as you pursue that, you figure out what is it that I love? What is it that I'm really into that I can, because I think it's that obsession of what it is I can dive into and get into that flow state where you lose yourself and become that's what turns you into an expert in a certain area, to where you know something more than others do because you love it. You understand. You can understand it better, and then you can act on that better, no matter what that is. I was talking to a guy yesterday. I've got a little cargo trailer I'm trying to sell, and this guy called me up about it. He was telling me, it was really interesting. He was telling me about his son who just loved building these custom motorcycles. And he knows these custom motorcycles inside and out and builds them up and sells them. He builds one motorcycle a year. And the guy's making a couple $100,000 a year building motorcycles, doing what he loves because he's become a real expert. And that expertise, that love, has created a name for himself in this micro niche industry that he's involved in. But I think it's things like that over time that are really going to set us apart individually as we build our careers, as we build our businesses.
Well, there's a struggle between depth and breadth, in the sense that we have so much information available to us that it can be very easy to be a mile wide and an inch deep versus going deeper and truly mastering a topic. And I'm not sure the answer is necessarily one or the other, but it's very easy to start pursuing a lot of different things and never becoming much of a master in one of them.
Yeah. I think with as much information as there out there in the various different weird niche things, I always know when I should probably stop consuming content when I can't find any deeper knowledge into this certain area that I'm digging into. I probably have reached the end of it. So I now need to begin becoming a producer of content, not just a consumer of content.
That's interesting.
Both to help myself become more knowledgeable and to add to the treasury, if you will, of knowledge that's out there in the world. If I get to the end of it and I still desire more and I still find more and I share that with others, I become a part of that.
That makes sense.
Yeah.
With the whole COVID thing, though, and the stay-at-home thing, it's very easy to go down these rabbit holes. Though there are days it'll be 1:00, and I'll start researching something, and it's like 4:45. Where the heck did this go?
Yeah,
it's so easy to get down those rabbit holes. Something I did want to talk to you about. You bought fake silver?
I think I did. I think I did. So we may have talked about this last time or the time before about just my philosophy of identifying risks and figuring out how to hedge against it. So the risks that I looked at were what do banking holidays look like, and then what do market closures look like. And in the U.S., the longest banking holiday was only about a week, not a huge amount of time. The longest market closure was 4 months. And so I decided that what I want to do is to have 4 months worth of living expenses, because I'm like most investors, you live on the cash flow from your assets. And if I can't sell those assets, I need to have an emergency fund somewhere, right? And so I decided I'm going to put cash, gold, silver, Bitcoin into my emergency fund, in my quote unquote safe, right? It's Bitcoin clearly doesn't go in my safe, but there's a key.
We would have lost all credibility if you didn't clarify that you can't put Bitcoin in your safe.
Yeah, but there's a key for my wallet, and that key might be in my safe. So there's that. Nonetheless, so years ago, I had bought like a few silver coins, and this is right around the time that there were all those rumors about them being fake. And most recently, I added to that stash pretty considerably because of my most recent research. And I'm looking at. It's become a point where it's a considerable amount of money that I haven't invested at this point. It wasn't before, but it is now. And so I wanted to figure out, how do I know if my gold or silver's real? And so like we were talking about earlier, I began educating myself, and I found out there's a number of ways that you can do this. One of the easiest ways for an individual to do it is with what's called a specific gravity test. And you need a really sensitive scale. You weigh the coin dry, and then you weigh it in water, suspended, and then you compare those two things, and you can actually get the specific gravity. And each gold, silver, all sorts of things, they have their own specific gravity within relative tolerance, and that's the best way to know, at least for a average Joe like me to figure it out. There's also these sound tests that you can do, and so I pulled some of my out, and I'm doing the sound test, and I'm hearing the bell, the ting, and it's a really long running bell that you can hear, and it sounds just like the one that I was researching. And then I pulled out the old ones that I bought, and it's clonk.
Oh boy.
And I thought, oh my gosh, I think these things are fake. So I don't know for sure, but I think they might be. I think they might be fake.
So you have ordered your own scale.
Yeah, I've ordered scale. Yeah.
I'd like to see a video of how this goes down.
Well, you can search it. Just search gold and silver specific gravity test.
So I'd like to see a video of you doing this.
Oh, okay. I'll give you a video of me doing it. It's but again, I mean, I just do stuff like that. I get into something, I start educating myself about it. I figure out, what's the information I need to know. And then what's funny is then I start talking to friends about it, and they think I'm an expert. And I think it's funny because I just watched a few YouTube videos and figured out, what are all these other guys doing? So accumulating the knowledge that's out there in the ether, to the point in which, you actually are doing the same things that the experts are doing. And so anyway.
You're a Renaissance man.
Yeah. Yeah.
Hey, have you been following Elon Musk the last few days?
No, not really. You mentioned him earlier.
He's got some rather strong opinions about the reaction to COVID and about Silicon Valley. He
not Elon Musk.
No. It's funny. He's another guy where I don't know whether to love him or hate him. I mean, he's probably insane, but he's obviously brilliant, and so it's kind of tough to get a read on him. But I guess he issued a message to politicians stating that we need to free America now. He referred to the policies for COVID as fascist. He wants to, quote, give people their freedom back, and then said, bravo, Texas. But then he had some rather strong things to say about Silicon Valley. He tweeted, Silicon Valley has become sanctimonious valley, too much the moral arbiter of the world. What do you think of that?
I don't know. I would say I can sort of understand what he's saying. I'm from Silicon Valley, so I'm a little
Yes,
bit.
You are a Morgan Hill guy. That is true.
I grew up south of San Jose, so on the outskirts with the cows. But nonetheless, I mean, I can hear what he's saying for sure. I can hear what he's saying. But I mean, I hesitate a little bit. I struggle. I go back and forth with this whole pandemic thing. On one hand, this is it's a coronavirus, which is the flu. So one of our friends posted in a Slack channel that we've got a group of folks in about, the decline in the flu and while we've all been stay at home. And I didn't say this just because I didn't care to argue, but I'm pretty sure those numbers should be added together, that he had the percentage of people with coronavirus and the percentage of cases of the flu, because from what I understand, a coronavirus is a flu. Now, I'm not a medical expert by any means, but a coronavirus is a flu. I believe it's a respiratory flu. And but okay, so that said, it's either an incredibly bad flu in the sense that this is overblown, it's just an incredibly bad flu, or it's an incredibly bad flu in the sense that this is a ridiculously bad flu. And if you look at the charts of cases, the thing that I struggle with is you can see the case count clearly kind of go parabolic, and then as we began social distancing, begin to flatten out. Now, it hasn't really declined all that much. It started to in certain places, but nationally, it's sort of lingering. It seems like if social distancing is working, it shouldn't just flatline, but begin to actually decline. And what I fear is that you open back up and we start to go parabolic again, because no matter how I run the numbers, even if you say only they say that only 15% of the people that get this actually have any symptoms in places where they've tested it. Well, if that's the case, I don't know what the case count number is today off the top of my head. Let's see. In the United States, looks like earlier this morning, it was 1 million cases. That's what I thought. So if it's 1 million cases, and if that's 15%, then there's only 6.7 million people in the country that have had it. Herd immunity won't kick in until, what do they say, 60% of the population has it. So we could potentially still. You see where I'm going with this? If there's 1 million known cases, but we only know of 15% of the cases because the other 85% don't actually manifest any symptoms, that would mean there's only 6.7 million people that have had it. This could get 10x.
We also don't know, though. If most people don't even show symptoms, we have no idea how many people have it and don't show symptoms.
Well, that's pretty known, though, because of the isolated cases where, like, there was that cruise ship that they had. Yeah. I mean, that's an encapsulated story. There's been random samplings. There was a local doctor here that's random sampled about a week ago. My friend's doctor was telling me he's sampled every one of his clients, and that's 236 clients. 200 over 200 of them. Well, let's say it this way: 34 of them have actually come back as they have or have had it. So it's about 15%, and only one of those actually showed any symptoms. So those numbers sort of jive a little bit. So I don't know. I mean, I'm not, but then I vacillate back and forth because this is going to sound really cold, but even with 70,000 or 64,000 deaths in the U.S. Through today, that's like, again, that's a really bad flu season. Yep. Only April. It's only April, so maybe that doubles, maybe that triples.
Well, when does the flu season
really
officially
bad
end?
Flu season.
Flu season typically ends right around summer, right?
Well, I think it's an annual number.
Yeah, but it's but the actual impact of it still is, I think, front loaded. I guess depending on how you look at the calendar.
You could be right. Yeah, you could be right. I mean, I don't know. I don't know what to think about any of this stuff. This is just what goes through my head.
Well, the other thing
all that to say, I vacillate back and forth.
So much. I won't say so much. This is a complex thing to have to make a true argument about because it affects so many people so different. The fact that you can have this, not show symptoms and all this, and you get some people are on ventilators or respirators, and some people are walking around like they're having bad allergies. That's a bizarre thing in of itself. You also look at the age impact of this, and the question is, well, okay, we're seeing a lot of COVID deaths in certain age groups. Well, would those groups have, if not COVID, probably been susceptible to something else? There's that argument as well. What I'm curious your thoughts on are how you equate that to the things you're seeing out of Sweden right now, who isolated their most vulnerable portions of the population. They didn't shut down schools. They didn't shut down restaurants. They said, hey, do your best to keep apart. And it was widely predicted that they were going to do everything short of eradicating their population. And they're seeing numbers that are fairly consistent with what we did here.
Yeah, I mean, I hear that. I think it'll be easier to tell after the fact. And it's really unknown right now because they're behind us. Like their case count didn't start picking up until April, where our first cases were a couple months prior. So it'll be hard to see what they do have right now. When I was looking at it yesterday, they have a higher death per population in Sweden. It's just hard to know, and then you never know if it's actually a good comparison. So they've got 244 deaths per million population. We're sitting at 180. So did we save 64 people per million by going this route? I just don't know. I don't know. I mean, I wrestle with this. I go back and forth, and I think, there's a part of me that thinks maybe, does our government know more than we do? Well, usually. Doesn't mean I trust them. I'm American. We don't trust our government. But nonetheless,
does our government for 200 and some years?
Yeah. Do they know this was, not to be a conspiracy theorist, but that this came out of that lab, and do they know what this actually does and looks like? Maybe, have they? But then there's a part of me that says, did my politicians just save millions of lives? Well, that story reads really well politically. It's really easy to toot your horn for something you can't prove.
Well, that's why politically it had to go this way.
Yeah,
it was the lowest risk thing, which really, really sucks, because we don't know. We'll never ever be able to say that the measures taken were justified or unjustified.
I think we may know, especially with Sweden going the way they are, if we can get some decent testing, you might have some comparison numbers, but clearly with both sides of the political aisle committed to this being, a very serious thing, will anyone that questions that is going to be relegated to some sort of conspiracy theorist.
Yeah,
I think.
The thing that Elon said that I do very much agree with, though, is just his criticism of Silicon Valley. And as a guy that talks a lot about leadership, it's something you and I very deeply care about, especially with the companies we're involved in. I have a hard time when it comes to leadership we see out of Silicon Valley. And let me caveat that by saying what it takes to start a successful software company, thinking the likes of Facebook, Uber, things like that. The qualities that it takes to do that are generally in direct opposition to the qualities it takes to successfully lead a more traditional or more legacy-oriented company. It's what it takes to be good in a software company. You could never take and run Coke or McDonald's or Boeing, even for that matter. They are dramatically different because so much of the way the business model in Silicon Valley works goes back to VC dollars, creating the hype machine. How else can we have companies valued at $50 billion that are not making a profit? It's about hype, and there are certain people, we've been seeing this ever since we were in grade school. There are certain people that are more predisposed to becoming popular, to selling themselves, and there are plenty of people. I would say I'm definitely on the end of the spectrum that am not wired that way. But I struggle with Silicon Valley, being this place, and I'm making generalizations here, so it's probably unfair, but a place that gives us lectures about what's right and wrong all the time, when a lot of people running some of their most well-known companies are some of the worst people on the planet from a leadership and an interpersonal perspective. There's definitely a miss there. And the fact that it takes somebody like Elon Musk, who one is part of that system, but two certainly has some of his own idiosyncrasies, we'll say, to point that out, I think is tragic that a lot of us that are outside of that world haven't been more vocal about it sooner.
Yeah, what's interesting about tech and venture capital in general is those companies create these first mover advantage network effects, and they have to grow so fast. They have to outrun a bullet.
Mm-hmm.
You only expect 1 out of 10 venture investments to work, but when it does, you expect it to do 10x plus, because it's got to make up for the rest of your portfolio. And only in tech can you actually grow that fast, where that's even a possibility. In a traditional brick and mortar business like we run, you can't actually grow that fast safely and not go off the rails. And so anyway, the reason I say that, you have to grow that fast. You have to create this what was the phrase you just used? The hype, right? You have to create the hype in the VC world. I think that lends itself to sociopaths flourishing in that environment in a certain respect. The guy from WeWork comes to mind.
Jeez almighty.
Hell,
I hate to say it.
I don't know the guy personally.
Steve Jobs comes to mind. Okay,
sure, and not to. I don't know these guys personally, and so I hope this isn't offensive. But some of the things and the way they've been portrayed, if they're even remotely accurate, are just inappropriate. And they lend themselves to the criticism that I think Elon Musk is referencing. But it's interesting. I was talking to a friend earlier in the week who runs a small venture capital fund, and he was actually talking about, their investments are doing great through this, but because they have a unique strategy where it's critical. Their products that their companies produce are critical to their companies, and he did that for safety, really. But it's become very important. But he was saying that a lot of the venture capital world, their funds are getting toward the end of their life, should be harvesting gains, aren't harvesting gains. Now you have this COVID thing that's leading to several write-offs. That's leading to delayed recognition of gains and receiving their capital back, which is going to lead to delay in that capital being redeployed, reinvested. So it could be very damaging to the, to Silicon Valley, this whole thing that we're going through right now, because that capital doesn't get recycled and keep that machine running.
Yeah.
That when you're investing for a gain, there's no cash flows. When there's no cash flows, there's no reinvestment. When there's no reinvestment, there's no future gains.
Yeah, Airbnb comes to mind. That was on tap to be a very, very significant IPO. It's certainly Silicon Valley darling, and I'm guessing their investors are probably in a hard spot right now because that company's been around for a long time. It's probably going to be hit asymmetrically hard, or at least harder than other Silicon Valley companies because of COVID. So that's
right.
That's certainly something that will mud up that cycle, so to speak. But
I think these are things that people forget: is markets are volatile.
Sure.
And when they're not volatile, it leads to complacency
and bad habits and bad decision making.
Right.
All
and then you bail out a phase, and that compounds the problem. You start it again, and the problem's bigger. Right.
Yeah.
And so we bailed out, long-term capital management for billions. Then we bailed out, the banks during the housing market for hundreds of billions. And now we're bailing out everybody for trillions. We've compounded the problem for 30 years.
We're going to get to zillions soon. I'm just seeing Apple reported here. And one of the things that I like about Jobs, and I'm very critical of Jobs as lead. Now, don't get me wrong. He's a genius, and he created out of his own mind products that I rely on daily, including my MacBook, whose screen stopped working this morning. But something he did that I always admired was choosing his successor to be somebody that was basically the polar opposite of him. And that was Tim Cook. You look at so many of these software companies, there has to be a transition at some point to somebody that is a better leader, so to speak, or a more traditional leader. And he did a very good job identifying that. So kudos to him. So, all right. I think we've beat these topics up about as well as we can today.
All right, good.
All right. We will be back next week. You can find us on the interwebs. He is, are you Tim Barrett or Timothy Barrett DM on Twitter?
Tim Barrett DM on Twitter. That's probably the best one.
Okay.
And then I'm Timothy Barrett on Instagram.
And Tim Barrett on LinkedIn. So you have 3 completely different vernaculars.
I was never trying to be a social media superstar. But now that that's changed, I might have to clean that up.
There you go. All right, I'm Chris Book on LinkedIn, Mr. Chris Book on Instagram, and occasionally I angry tweet under Chris Book on Twitter. So give us a buzz if you have any questions. Love to hear from you. Otherwise, we'll check in with you guys next week.
All right, thanks.